Hey guys, Jason Schnitzer here with O.C Realtor Talk, and what I've got for you today is I'd like to explain a little more about what it means to be a cosigner and how that looks with regards to qualifying for a loan for real estate. Now, when you're going to buy a house, they're going to take your financial information and put that through a formula in which they use your gross income, and then they run your credit and find out what your debts are. And then they juxtapose the two together, and you get what's called your income to debt ratio. And that particular threshold is about 45%. And what I mean by that is they'll take your gross income, depending on your income type, there's a little asterisk there, and then they'll take your long-term debts. And what that means is any car payments, credit card debt payments, student loans, etc. And they'll allow 45% of your gross income to go towards your long-term debts. And now included in that 45% is your mortgage as well. So what happens if, let's say you want to buy this house and you can afford it, but maybe you haven't been on the job long enough so they can't use all your income, or in certain circumstances you get overtime that they can't use, or maybe you're buying a house with a spouse and your spouse doesn't have enough time on their job to qualify, but you can afford the payment. You just need somebody to co-sign or co-borrow for you to basically say that you're good for it. Now, when you bring a co-borrower in, typically they're not planning on living in that house. It's called a non-owner co-borrow. And what's nice about the rules nowadays is, let's take just a hypothetical situation where it's husband and wife, or fiance and wife or husband to be, and they're buying a house and mom or dad is co-signing. So when you have a non-owner co-signer, what they get to do is blend your ratios. So it's your gross income plus your mom's gross income, and in some case your dad's gross income, all combined into one. And in most circumstances, that makes this ratio go way, way down. And it overqualifies you to buy that particular house. What else? Not only do they help with qualifying from a monthly payment standpoint, or to offset your income to debt ratio, they can gift you funds. And there used to be a lot more criteria for this, but nowadays you don't even have to have a single dollar in your bank account to qualify. Your family member could gift you the entire down payment and your closing costs. And of course, a little asterisk there, this only pertains to conventional financing, usually FHA, etc., no jumbo loans. But pretty slick there. Talk to your tax person about what it looks like for gift funds. And the only caveat to a non-owner co-borrower a lot of times is you do take a small interest rate hit. And what I mean by that is you're gonna have to take a higher interest rate, because the fact is that the lender considers this a higher risk loan. The person helping you buy the house isn't typically buying that as their primary residence. So, they see it as, if everything were to go bad, that person is less likely to help out with this house they don't live in versus their primary residence. So we are seeing this more and more now, especially with people who, let's say for example, have been in a really good job for a year, and they plan on making more money. But like, for example, the lenders typically like to see you having 2 years on the job, so 2 full years of tax returns showing that you've been making that consistent income. That would be a pretty good opportunity for your parents or whoever to step in and be a co-signer for you. So you have a year on the job and you can afford the payment, but you just can't qualify on your own because you don't have enough time in the position. Perfect opportunity for a non-owner co-signer. I've given you a few hypotheticals here. There's a lot more potential situations. So if you've ever been curious if you're ready to buy, or maybe you feel like you're ready to buy but you're not sure, feel free to reach out, send me a message, give me a call, or book a free consultation online. Would love to help you guys, walk you guys through what that looks like. So again, this is just how it looks for co-signing in real estate. Thanks for watching, guys. Catch you on the next one. Hey guys, thanks again for watching this week's episode of O.C Realtor Talk. If you gained any value from this video, we'd really appreciate it if you liked, subscribed, and followed us on all our social media platforms.
Yeah, what Jason and I believe is really, really important for you, whether you're buying a house or selling a house, is understanding the process and knowing exactly what you're getting into. So if you ever have any questions, just follow the links below.